Perfect. Hello, everybody. My name is Andrew Shorter, licensed independent insurance advisor. I appreciate the opportunity to present on how insurance fits in with succession planning for business owners today. I know it may not be the most fun or sexy topic, but it sure is reality for many of us business owners. I could bore you to death, no pun intended, but it isn't my objective today. I'd like to help educate you so you can make informed decisions with your business moving forward. I've worked in the financial services industry for almost 15 years now and seen many different situations play out with clients, and now very focused on mitigating the many risks we face as business owners every day. I've had many clients, friends and family members become seriously ill, dependent and pass on without getting into the gory details. It is everyday reality. Like many entrepreneurs, I've taken many risks over the years in both business and in life, won and lost and learnt some very tough lessons. But now I'm all about mitigating risk and protecting the downside for both my business, family and my clients, importantly. So let's get down to it. Let's look at what we're going to cover today and the agenda. Firstly, the importance of protecting your assets. Who needs protection? How does succession planning relate to insurance? Some key terms, case studies, some real life case studies, some products and solutions and terms you may or may not have heard of, and planning and next steps. So, the importance of protecting your assets. Let's get started. What if the unexpected happens? As business owners, our biggest fear is loss of either profit or cash flow, and even our people. It can happen when we least expect it. Trust me, I know firsthand. You may have heard of the 3 Ds. Death, divorce, and disability can equal disaster. Believe me, folks, I've seen it. Death, divorce, and disability can equal disaster for the business owners and the shareholders and can strike at any time when we least expect it. The impact on the business cash flow can be catastrophic when an unexpected life event occurs. I've heard and seen many horror stories over the years where the business owners haven't planned appropriately. So how does this affect my business, you ask? Well, the best way to put it is that we insure our home and vehicles, so why don't we protect our cash flow, our people, and our valuable assets? Many of my clients recognize the risk and do exactly that. Smart move, folks. We specialize in working with sole proprietors, family-run businesses, partnerships, and small to medium-sized enterprises. At AMS Financial Group, we specialize in working with sole proprietors, family-run businesses, I just said. Can be complicated at times, and most of our clients are business owners, entrepreneurs, and professionals generally. Like many of you, as a sole proprietor, you can only count on yourself to get the work done. Whether it be sales, operations, IT, finance, or HR, there is no fallback plan when the main guy goes down, or gal, for the count. Now that if there are partners and spouses involved, it can be more complicated, as with family and family-owned businesses, especially with a number of siblings or partners involved. What is succession planning and how does it relate to insurance? So what does succession planning have to do with insurance? Too often entrepreneurs spend years building a business and come to an agreement with a partner or a family member over succession, but fail to make plans to finance the succession. This is where life insurance plays an important role. Did you know your corporation can own a life insurance policy on your life? Your business can pay the premiums, be the beneficiary, and life insurance proceeds are paid tax-free to the corporation. If your business has one or more co-owners, you might consider establishing an agreement that upon death of any owner, their interest is automatically purchased by the owner or owners, known as a buy-sell agreement. This can ensure that the beneficiaries of the deceased owner, including spouses or their family members, don't unintentionally become owners. Can be fairly common, where a wife and lawyer can end up running or partnering with a business owner or business partner of the deceased person in question. The three questions we ask. The first question is, in the risk management world, is what impact will this have on the day-to-day operations of the business, specifically the cash flow, viability and sustainability for the business to continue? What can we do to protect the cash flow and viability of our business asset? Succession and continuation comes into play. They say cash is king, but I say cash flow is king. Without it, we are hooped. Especially in business, the doors will simply close. Folks, not kidding, believe me when I say it, life happens and the house of cards can come tumbling down all at once. Secondly, business owners and other key executives spend considerable time and effort to acquire the knowledge, experience, judgment, reputation, relationships and skills that make them valuable to the business. The loss of an owner or key personnel whose contributions are integral for the business success can be simply devastating. Thirdly, the unexpected can strike when we least expect it, as mentioned. I often talk to people and clients about having a plan B and a C, and not everyone has a plan A, unfortunately. It is never too late to start on your plan and implementing a strategy. Some will choose to self-insure, and I respect that everyone makes their own choices. Most people focus on the upside but forget about the downside until it is too late. I'm big on protecting the downside of my clients, mostly being business owners, as we tend to focus on our wealth, we neglect our health. As my father said the week before he passed on, bless his soul, son, I'd give away all of my money for my health. He passed away from brain cancer age 64, far too young, but this has stuck with me over the years. And I use these business principles. So what is key person protection? It's a fairly common term that we hear bandied around. Key person, also known as key man insurance, is a business insuring itself against the financial loss it would suffer if a key person in the business died or were diagnosed with a specified critical illness or permanent disability if chosen during the length of the term of the policy. Disability insurance can be referred to as business interruption insurance. The plane can go down or the bus can come along and turn your world upside down. Without warning, I'm sure you've all known somebody who has been impacted by tragedy or a sudden unexpected event. So what about shareholder buy-sell agreements? What does that mean? You may have partners, investors, and shareholders. No one will force you to take out coverage except for your investors, shareholders, and possibly even your spouse. This is a big one, believe me. I often ask at the start of the process, do you have a shareholder buy-sell agreement in place? And sometimes the answer is yes, which is great. My next question is, then how is it funded? Well, if the answer is from cash flow or money in the operating account, I become very concerned. So what if you have to come up with $500,000, for example, to pay off your deceased partner's spouse for the purposes of purchasing their shares in the business, as well as legal and accounting fees? It can all add up fast and in many cases cripple the business. Not everyone has that much money available or in cash flow, and I've seen a real life example of this happen. I do recommend you seek advice from your lawyer or accountant. In many cases, we work with both legal and accounting tax professionals. Please note a shareholder buy-sell agreement process can take longer, and we recommend that you seek advice from your lawyer and accountant to put these together at the same time. So what about some real-life case studies? What does all this mean? Well, I've come up with a few examples of some businesses and some clients that we've helped to protect. Now, I'd like to share some examples. Some of you listening today might see some similarities to your own businesses or situations. These clients are all at different stages, from early stage startup, being 1 or 2 years in, to more established and mature businesses that have been operating for 10 or more years. One common one I seem to be coming across more is software and technology startup firms. I've had a couple of clients in a similar position. The situation was the startup tech firm was funded by private equity investors. The founder was the brainchild behind the software development, and the investors wanted to ensure that their money and their valuable investment was protected in the event of the unexpected and something happening to the founder. In the one case, we implemented key person protection which is purchased by the corporation, as well as being the beneficiary of $2 million on the key person. Another example was a manufacturing high growth business that we're currently working with, actually. It's a new manufacturing business. They're looking to build a plant and a manufacturing facility. Currently raising capital. They've raised a couple of $1 million and looking to raise additional capital. The shareholders and investors wanted to have comfort in protecting the founder, who's in his actually in his 60s. So we're looking to place $1 million worth of coverage on that particular client, as well as helping out with some general liability and directors and officers, which we can assist with through our partners as well. So that was the solution. That will be an ongoing project, ongoing client. As they grow, their needs will be changing. This one here's a pretty a bit of an emotional story. I met with my client who owns a franchise restaurant business, and his wife had recently passed away from cancer in her late 40s. So he saw the need to protect both his business cash flow, and he had or has two teenage daughters who he's looking after. So again, if he isn't there to operate the business, it would be a real problem for both the business and his family ultimately. He had 5 employees. As I said, his wife had passed away, and he was raising 2 teenage daughters, so he wanted to make sure that he had protection in the event of something were to happen to him. He had fortunately, they'd been smart enough to have some coverage on his wife, and that helped him through the process of running his business. So he really saw the value in that opportunity. Another one, which is quite a cool story, is a fairly new management consulting firm with an annual revenue of approximately $1 million. Husband and wife team, 50 and 45 years old, with some past history of health concerns. They had a desire to protect their cash flow, which is growing very quickly, up to $1 million in the event of the unexpected. So we provided both key person for life and critical illness in that situation, and they're looking to transition and sell the business within the next 10 years. So that's part of their succession strategy. What else do we have? Another one here is a family importing business, which we did some work with. Father is 61 years old, and both the son and daughter are in the business. The father was planning to transition the family business to his 2 children. This is fairly common in a family-owned business environment, and wanted to ensure that the transition went smoothly between the parties. Family can be tricky, as I mentioned, so it's important to have things in writing and have the appropriate agreements in place from a legal perspective, as spouses can also get involved. That's another component to that story. We provided some key person life and critical illness insurance, and also assisted with shareholder buy-sell agreements in place, and working with their lawyers as well. So when is the best time to start a transition succession plan? My answer to that question is when you first establish the business and you're in a positive cash flow situation. So the sooner the better, folks, is what I say. What are some of the products and solutions available? We've talked about key person life. That can be both life or health related insurance. There's both term coverage or permanent coverage on the life side. The permanent term is a temporary but most common solution people tend to go with because it is cost effective. The permanent corporate owned coverage does offer some better advantages, while it does come at a high cost, and can also tie in with your estate planning strategies and tax efficient wealth planning for your beneficiaries. Critical illness and disability, what does that mean? Two different types of coverage I won't get into too much right now, but if anyone's interested, we can take that offline. Critical illness tends to pay a cash lump sum payout, whereas disability pays a percentage of income. So with critical illness, you can choose your amount of coverage. It could be anywhere from 25 to 50 up to several hundred thousand, or even into the millions in some cases, and that pays a tax-free lump sum benefit, whereas a disability pays a percentage of your income. But both complementary solutions. If the budget allows, I would recommend having both. So let's take a look at some of the products. We've talked a little bit about that. We talked about the term coverage, permanent coverage. They're all great solutions. I say better to have something than nothing. So what are the steps required to protect your business? Firstly, I recommend you contact your broker advisor. Your advisor would normally do a needs analysis, which can be in the range of 1 to 2 hours, sitting down with, whether it be yourself, your business partners, maybe your spouses would be included in that as well. Hold a second meeting to discuss options and budget. I would allow an hour, depending on the complexities and the number of people involved. A third meeting may be required depending on how many decision makers are involved to confirm requirements. Complete an application that usually takes allow 1 hour per individual. Something important to note is you do need to go through an underwriting process, folks. This isn't a insurance companies do like to, they're in the risk management business, and they do want to make sure that you can qualify. So there's no guarantees, but we do our very best for our clients to make sure we can get as many approvals through as possible. But I would point out, both financial and health underwriting can come into play there. So that is something to be aware of. Again, health can change, so we recommend getting things underway sooner than later. Completion of underwriting and approval by the insurance carrier is really the final step in the process. As I said, the sooner you start the process, the better. Your advisor will guide you through the process and the completion of the underwriting, approval, and policy delivery. And your advisor should be able to explain any questions or concerns that you have. Then premiums commence, the fun part, paying the premiums. This process can seem a little overwhelming, but you can do in stages, and depending on cash flow, doesn't need to all happen at once. While your advisor can help build a program to suit budget and requirements. Remember, once you start, it will alleviate some pressure and concerns for shareholders and employees, as well as probably help you to sleep better at night and free you up to focus on the big picture. Every business is different and has unique needs. This is where your succession team can review, and your advisors can help implement a customized plan to suit your business and financial requirements. We recommend that you seek independent advice. In most cases, insurance advisors don't charge for their services. You should deal with a licensed advisor, which will seek, an independent licensed advisor will seek out the best available options in the market on your behalf, and choose an independent, it's someone that is objective and independent, as opposed to promoting one specific company. And in closing, I'd like to say how important it is to seek advice. In most cases, advisors, and like my team, don't charge for their services, so why wouldn't you use the experts? I'd recommend that you choose an objective independent advisor, and sooner you get the process started, the better. Most advisors will provide a free, no obligation consultation, which we're happy to do. I'd like to thank you for your time today and for this great opportunity to share some insight into insurance and succession planning with you. Also, I'd like to extend a special thanks to Alison and her team. We'll be more than happy to assist if you would like to contact us and do a no obligation review, or provide you with a quote for coverage. At this time, I'd like to open up the floor for some questions if anyone has any. Thank you very much.
Perfect. Thank you so much, Andrew. And
You're very welcome.
And again, with other webinars, if anyone has any questions and don't have access to a microphone, we can also open up the chat box as well. Oh, sorry, I clicked on this to give everyone audio, and there we go. And I have a question for you as well, Andrew.
Sure.
So a lot of webinars that we've seen, and in your webinar as well, we've seen that the best time to engage a professional is at the beginning. I know from my own experience and also working with different members, the business cycle changes quite often. So how often do you recommend someone revisit their insurance products or needs as they grow the business, or what would be your recommendation?
Yeah, that's a really great question, Alison. You know what? We work with a lot of fast-growing businesses, and their needs are changing really quickly. So what may have worked a year or two ago may not be relevant for the business at the stage it's at today. So my answer to that question would be probably annually at a minimum. So every 12 months, I would suggest you'd want to review where you're at. Cash flow can change. That's obviously a big bearing on if the cash flow increases or decreases. That has a big bearing on things. But I would say certainly annually, and maybe even twice a year, you should be talking with your advisor. And you know, as I said in the presentation, your accountant and lawyer may be involved as well. So we encourage our clients to bring their lawyers and accountants in. And I'm no tax specialist, so I always defer to the professionals as well as the legal team and so on. So yeah, so as often as and if the business is growing quickly, the more regularly probably, if that makes sense. So don't leave it for 5 years, because a lot can happen and change, and you know, the wheels could certainly come off if you don't take action.
That's very cool. And from your presentation, it seems like any type of succession plan that people are looking at implementing, like a family transition that you talked about, or a employee buyout. Essentially, if you're bringing in some of the middle management or third-party sale, there's a lot of different products. So
totally, for sure. Yeah, definitely.
Perfect. Well, thank you so much. It doesn't look like we have any questions in the chat box, but thank you so much for your presentation. My apologies to the crowd for some of the technical difficulties at the beginning. That was on me. But